what comes to mind first, there are two things that came to mind this week that created a lot of havoc and may still. So the first thing is the FHFA agency, which is the federal government agency that oversees Fannie Mae and Freddie Mac, who are still under government, what they call it, control. They're captives of the government. They used to be, publicly traded companies, but now they're under the purview of the federal government after the last mortgage meltdown. They would have failed. Some people say they should have just let them fail, but they are the biggest conduits for mortgages in this country. So letting them fail would mean that no 30-year mortgages would be available. So they did not let that happen, thank God. Anyway, so back on August 14th, out of the blue, Wednesday evening, it was a Wednesday evening, August 14th, hopefully that's a Wednesday, they announced that they were going to start charging an adverse fee, adverse market fee of 0.5%. There was so much pushback that by August 25th, they were rescinding that decision and pushing it, not rescinding it, but stalling it till December 1st. So we thought December 1st, great, that gives us time to get lots of people very low interest rates before that 0.5% kicks in. That 0.5% is equal to about 0.25% in interest rate. So this week, they love Wednesdays, I guess. This week on Wednesday, the lenders almost across the board announced that they would be implementing that extra 0.5 point fee, because if they will be charged that December 1st, Fannie Mae is charging that, and Freddie Mac are charging that 0.5 point by December 1st on loans delivered to them. So what that means is if Fannie Mae is receiving a loan and paying the lender back, which is basically how the money flows, right? So maybe I should take that step first. So when a loan is created, either through a mortgage banker company like Stratus Financial, where I work, or a mortgage broker or a regular bank, the loans then are usually either transferred to a servicer or sold to another lender, who ultimately will be selling to Fannie Mae. So sometimes it's only one step, but most of the time it's two steps. So a small mortgage banker like us, we sell it to a bigger entity that then sells to Fannie Mae. Or if you go directly to a bank, the bank then is either going to keep it in their portfolio, that's totally possible, but most of the time they're also selling it to Fannie Mae or Freddie Mac. So now back to this deadline thing. So December 1st would be the day that Fannie Mae starts charging on files they receive after December 1st, which means probably that you have to send the file in, that the lender has to send the file in probably November 1st because of the sheer volume of business that's going on right now. So that means that an entity like us, if we're going to fund the loan, we have to fund it basically by October 15th to sell the loan to the other entity, who will then turn around and sell it to Fannie Mae. So that presents a problem, and that's why the investors we sell to, there's all kinds of them. Some of you have gotten loans through me, so it could be Flagstar, it could be I'm drawing a blank. We have like 6 or 7 investors we use most of the time for the third, what we call vanilla loans, the Fannie Mae, Freddie Mac loans. And so they have to turn around and sell it to Fannie Mae. So they want us to have sold it completely by November 1st. So the problem with this is that loans, for the most part, are taking 45 to 60 days. So we had to scramble, lock in a bunch of loans on Friday, because starting Monday, these investors are going to put that 0.5 point in. So even though Fannie Mae's not charging till December 1st, it trickles all the way down to now because of this chain of lenders who touch the file and sell the file and all that. So So that was quite a shock to get that message on Wednesday night, because that meant I had 2 days to reach out to as many people as I can. Some people hadn't even applied, so I had to take their application, get them uploaded into the Fannie Mae system, and then get them locked in. So that was a lot of chaos there in a short bit. So we'll see. I'm hoping that even though this 0.5 point kicks in, hopefully interest rates will come down a quarter to offset that. But that's my next point is that, as soon as there's good news about a vaccine for COVID or getting closer to it, maybe even it'll just take till after elections, but something of good news will make rates pop. And so if you haven't refinanced, if you know of someone who should refinance, is in a position to refinance, now would be the time, just because we don't know what will come down the road. So that would be my advice. Okay. And also, don't go to a big bank. What I heard is many of the big banks, they call them the big five, you know who they are, the Wagon Wheel, the Big B. They are taking 90 to 120 days to refinance people. So you're well into who knows when. So anyway, so that's just my bit of advice about the rates. Why did the rates change? People were asking me, well, Athena, if the news said that these rates are going to change December 1st, why are they already changing them? That's why. Because the process and the chain that it goes through takes that long. And so they're charging now. They don't want to be holding the bag for the fee, basically.